Good morning, everybody. Let's go ahead and get started here. Again, if you have any questions today, make sure you put them in the Q&A area. It's easier for us to find. If they're in the chat, we have to search a little bit. So if you do have a question in regards to what you see today, make sure you put it in the Q&A. Let's go ahead and do our disclaimers and jump right in because we just had an alert. And I want to make sure we hit that too. I don't know if it's a great trade or not. Al will help us go through that. But trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and your risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. Make sure you're aware of all the risk associated with trading, and then also seek financial advice from an advisor if you have any questions or doubts about that. This live trading room is for education purposes only. There's no financial advice or recommendations given. Any trade taken during this time with you is not any sort of recommendation or suggestion that you should jump in and do the same thing. You may, but it's not a recommendation to do so. Past performance is not indicative of future results, and make sure you trade with a trading plan. Al, are you available and ready to share your screen?
I am ready to go. Let me
stop sharing mine so you can move over and do yours. And it's all yours, my friend.
Okay, here we go. It looks like we have an ascending wedge on the US CAD 745 this morning, which is just like right now. And let me get my template up here. And everybody see my screen okay?
I'm seeing it good.
Okay, all right. So basically, here's the alert. I'm going to draw it on. Actually, it's breaking out as we speak, so we may be a little bit late, but we may be able to catch a retrace on this. But anyway, I drew the wedge on my 15-minute chart. I'll just take all this stuff off. Here is the alert, and I'm looking at, there's a pivot high here, pivot low. The alert came right here, so I'm looking at the last significant highs low. It was ascending, so I started my A up here, came up to the pivot before this little drop. And right now I've got it right at the top of the wedge. And this was my target right here where it is right now at the moment. That's the first target I see. But anyway, we may not be able to get into this one, but we'll just have to wait and see what it does. The next target zone I would be looking for is if we can get through all this little area up here. I'd be looking at this peak right here. And you see, what I look at is pretty much when I drew the wedge, I just sort of took the D, I moved to the outside, I just flattened it out because this was, I could see where this was a nice drop down, but it had to come through this before it had further to go up to this area. So like right now, it looks like it's coming back a little bit. We'll see if it gives us an opportunity. But anyway, they already made the first target, so that was from here, the break to up here. Well, actually, that's only 2 pips. So up here, we've got 4 pips. And all the way up to the top, we're going to have to come all the way up to this area here in order to get our 7 pips out of this trade. So I'm going to move that up in that area, and we'll see what happens here. So we're going to come to our 1-minute chart. And so sometimes you just don't have time to get into them like you'd like to once you get the alert. Some of them you wait hours and still nothing happens, and this one just broke right away. So I'm on my 1-minute chart. I'm going to get everything all tweaked as close as I can. And actually see where this had a little bit of a rally. It's basing right here, and now it's coming on up to retest this. This is probably going to be about where it's going to start maybe doing something here. We have a blue line up on our fib line. So right now we have the break of a fib line. This is the 7 pip target up here. That 25 to 19, yeah, pretty much almost 7 pips. And we're just going to have to wait. This looks like we may have missed this one. We don't want to jump into a trade too early. We don't want to be chasing trades. It's we're either going to get in it correctly or we're not going to get in at all. So having said that, I'm going to take, and I'm going to draw my 2 pip area I'm going to take it from the top of this, of the wedge. I'm going to move it up 2 pips. And so that says 16.4, go 18.4. And that's my entry to buy. So we'll see. And right now it really hasn't, it's still, that was a nice little straight up move on that. It was you still wouldn't have gotten your 7 pips. So this could very well be a head fake. A lot of times what happens you'll see is that you get the alert, it goes up, it just barely gets 5 or 7 pips, comes back down into the wedge, and then it breaks out the bottom side and goes for a nice run. So do not despair. We still might have an opportunity to do something with this one. But right now I'd be a little bit hesitant to get in, even to go long. There is some strength. We look at our strength meters here. The dollar is, right now, it's the second strongest. I'm not sure what the strongest pair is right now, but it's the 6 on it. Out of the CAD's the weakest on the 15-minute. The CAD's the weakest. It's got a spread of 5, spread of 3, spread of 6. And we're going to just wait and see if this gives us an opportunity. And that's about all we get. All of our moving averages are, let's see, this is on this should be on a 15-minute chart. That makes a difference. You know, that makes a big difference. I had it on the wrong chart here. Oh, that helps. Let's try this again. I didn't realize that was on a 15-minute chart that I drew this thing on. It was a ascending. So I'm going to start from here, come up to the top, tuck it in down here, bring it up to the top. I'm going to flatten out the top on this. This may not be too bad, actually.
Yeah, that's touching the bottom, the bottom of the upper trend line for me right now.
Yeah, so somebody catch that I was on the wrong time frame on that.
Okay. Yeah, because mine's a little bit different than that.
Let me take this one off here. This one doesn't count. That was on drawing it on the 1 minute chart. We don't want to do that.
No.
Where's my D? Get my D over here. Now we can sort of flatten this thing out a little bit. I'll move my B over. I'm on 5-minute chart right now. I'll tuck my D in right there. There's an ascending, so I'm looking for a anchor, and then here's a hit, tuck it in real close. So if it breaks out there, that's much better. Take all this stuff off here. Move this out of the way. Here's where my B is. So that's it's going to have to break through this B area. And there's really nothing over here to the left that I can see anything recently. So if the thing does break, it could break to the upside. Dollar is showing strength. Let's tuck it again on my 1 minute chart and fine tune everything. Tuck this in as close as I can. And we're going to wait for the break to the upside. I don't recommend taking trades inside the wedge because a lot of times it's just not quite ready. The wedge is developed because it's consolidating and it's spooling up, and you don't want to be taking things inside that because you just don't know which way it's going to go. There's usually a lot of volatility on either side, but once it breaks the wedge, that's where the move comes. Until then, you just become somewhat patient. $7.45. Well, I'm way off today here for some reason.
Hey, if you guys have questions or anything about anything you're seeing, please put them in the QA section. That way we don't lose it in the chat. And then we'd be more than glad to address any of those questions as they come up. And happy morning to everyone.
Yeah, good morning, Matt. And you see,
Sorry,
we did
I
have a
wasn't
little
able to
bit of we did have a little bit of a breakout at the bottom, but it didn't really materialize. It went back out, came back in. This could have been a little bit of a fake out. We'd like to draw a 2-pip range underneath. I'm going to do that now. And then we're going to take this and move it down to, see, about 9.6. Right about there is close enough. Make this our entry zone to sell. Check our strength meters and see where everything is strength-wise. And we have all of our moving averages. These this 62 is way down here, so that means it had a nice move up, come down. If this reverses, it's going to come down. This will be the first test of the reversal if it breaks out the bottom. And you have some areas right here that you'd be looking at for a target. I'd be looking at a target right at the bottom of this nice big blue candle. Target 1 right there. You have plenty of room to the downside. If you know, right now we've got some pip lines right here. These are about 7 pips apart. So if it does break the wedge, we have a potential of getting all the way down to, this could be a 21 pip move down to this side. It'd be pretty much clear sailing all the way to once it breaks the A part. We should be right in this area here. Once it breaks that, now we also have a 62 moving average coming in on the 5-minute. That would cause some problems as well. So keep all that in mind. I like using the FIPS on the 52 on the 5-minute just because those are 21 pips apart. And if I can catch the break out of the zone near one of those, it's usually a pretty strong move. But right now it's just consolidating and just bouncing back and forth inside the wedge or just waiting for it to break. And if this thing breaks to the upside, let me see here, there would be let me see where there's nothing over here. If I look at a higher time frame, see where this area is. And see if somewhere over to the left, there's a place where this thing started from. So that's going to be right around in this area. So I would be looking at this zone right here. Pretty much the top of this, probably right about in this area. If it goes to the upside, I'd be looking at coming somewhere into this area here. It came as high as into this zone. This is as high as it came. Move that over here to the peak there, and somewhere in this red zone, we could probably expect it to reverse. I had to go all the way to a 3-hour chart to be able to find that area. We'll go back to our 15-minute chart and see where it comes. If it breaks to the upside, looks like it's trying to. There's the break.
So tell me, is there a little science or something behind you wanting to use the 3-hour chart, Al? Or is there just...
No, it was just a matter to find out where it was without having to scrunch my chart up so much. I just knew that it was off my chart on my 15-minute chart. It was off my charts here, so I just figured I'd just put a higher time frame so I could catch it, see where it is faster. It's wherever I could find. So right now, if you look at the left-hand side of the chart, there's nothing over here. And usually you can see when if you have especially on a 15-minute chart, you'll see where it came back, where it came from. And so right now, this is moving nicely to the upside. It's coming right up into that zone, into this area. This would be the top peak. So this could be a head fake up to this area. Let me get my 2-pip breakout area here so I can see where it is if it comes back into it. The US CAD is not my favorite pair, although it's it works well, but it's can whip you around a lot too. See 23.25. So right about in this area here, you see where it came right up into this zone. We're on the 1-minute chart now. It came right up into the zone, closed with a very small wick, came back down, and after they closed, there was like no red wick at all, and just took off. So we'll see if it gives us a chance to get back in, but it's already broken through the A sec, the B area. And if we're able to get into it, if someone was able to get into this trade. So you wouldn't have been able to get, this is about as early as you have been able to get in, about there. Here's the 7 pip target, right? If you got in right at the first candle coming in, you're just about ready to take your 7 pip target. This one broke about 12 minutes after, about almost 30 minutes after the alert. Any questions? Right now, we just have to wait and see if it gives us an opportunity. If we look at all 3 time frames, the dollar is strong it's the strongest of all on all 3 charts. It's almost the strongest on the 15. The CAD's the weakest, so we don't want to be taking this thing short. We can be looking for pullbacks and see if we can possibly get in for another opportunity to go long. Right now, it looks like the British pound seems to be the weakest of all the pairs, or the strongest of everything. The CAD seems to be the weak on the higher time frames as well.
Ruben's asked, and you may have already covered it, asked if you could show how your wedge looks on a 15. Did you show that already?
It's right here on this one.
Okay. And then Alan asked the question. It says, it is my understanding that we look for a 5 to 7 pip move for the wedges, fusion, and other strategies. And looking at what Hawkeye is teaching, it looks like we're catching the 5 to 7 pip plus move, plus continuation, I should say. I'm not sure what Fusion's doing. I don't know what she's teaching as far as what her targets are. What we use here is position sizing. So we don't need to go these long, huge moves. If you want, you can go further. We found that if you try to go further with it, you're having emotional wear down that you're going to get naturally. It all comes down to personal preference on that. Wouldn't you agree, Al?
Yes, that's exactly right.
We have some back testing that shows 7, 12, and 21 are good places. But if you want to go to that 12 and 21, then you need to lower your position size to make sure that you're not over trading on that.
Yeah, because you're gonna have to take a pullback.
Yeah,
7 pips generally is going to be straight. It's going to be very little pullback once it breaks the wedge. That's why we like it. Now there is another money management that I originally didn't really enjoy, and now I'm starting to like it a lot more, is where you draw a stick, and maybe Al can
I can show you how that works.
Because that will keep you in the trade potentially longer. Understand that it gets there about 77% of the time, so it's not 100%, but it will give you more in most cases than your 7 pips.
And the way the stick works is you actually have a straight line. Let me get to actually have one called stick. And actually what you do is you take the range of the wedge itself. So you could be looking at the A to B or A to D. I usually like using like the A mark to the D. So I'll put the A mark right even with the A, align it with the D, snap it, to the D right up here. And then what you do is, so that's your range of your wedge. And then you take your D, and right where it broke out at the wedge, your target is up here at the wedge, up at the top. That would be your target, which is actually pretty close to where I have this target set as well. So, but you take it right where it broke out of the wedge, and then you try to, this would be your target area up in there. And if you look and see if there's anything close that we usually look at, we look at a green line and a red line here on the 1 minute. So if it breaks this, we're coming up here. If it comes up to this area, I would probably be out of this trade. This is a very reasonable target area. Also, this is the area that we looked way back at the 3-hour chart, and that's where we found the top of the wick. And then this red line up here is where the top of that was. So this has the potential coming all the way up to retest this area right up in this area right in here. I don't know if it's going to get there, but that would be that's the theory behind all that. So we move this over to where it first broke the wedge, and then we'll see if we can get it to our target. And that's another tool that you can use if you don't have all these other indicators and fib lines and things like that. This is a nice little gauge to use that works, and it works the same way on the downside. You have the same, if you clone it here, you just take it and move it down to where it breaks out at the bottom. And then that would be your target down in this area. And are there any more questions while we're waiting for this thing to materialize? This is really the best trade we have going right now. I did draw up the Aussie US, and it's just been, here is the wedge at 6:45 this morning. It's just now starting to consider breaking out the bottom.
So Mariska, you got a great question there. Aiming for 75% of the stick. Actually, you're kind of aiming for 100% of the stick, but there's a couple ways to do that. It's about 75 or 77% of the time it's going to go to length of the stick. Maybe it was not clear when I mentioned it. But what's really important to know about the stick is that if the stick is longer than 10 pips, then guess what? Take your take profit at 10 pips. You don't have to go the full length of the stick. Then you're increasing your probabilities that it gets to your target. So if your stick is like 14 pips long and you want 10 pips, then try for the 10 pips. Just understand that there might be a point where you might get a bigger pullback than you wanted, and it's 77% of the time, 75% of the time, it will get to that stick. So just be aware of that. Hope that answers the question.
Let's see, as this thing's pulling back, I'd like to see this can come down and get a little hook on the this blue RSI down the hook at this 11% range. And then have all 3 red candles or all green candles to the upside. Now you're looking on the 15-minute chart, you can see that the dollar is still strong by 4, still strong by 5 on the 5. And it's just now where we haven't, this thing's sort of going to be flipping back and forth as this thing's pulling back. But it's coming back and retesting the top of the wedge. It's coming right into our zone to buy. And if we can get the close and flip on this RSI, it would be a good possibility to go ahead and try taking it long.
Got a really good question from Alan. Wedges and triangles have 3 sides. So why does Al use the D? Use a D leg? Well,
Basically what it is you're really looking at two legs. You're looking at the AC leg and you're looking at the BD leg. The thing is that the triangle tool, which is what I use to draw it, that is pretty much why it gives you 4 points. It gives you two highs and two low points, uh, and so that's just it basically is the same thing as just drawing single trend lines. I just use it as this triangle tool. The A and B is nothing really significant other than the fact it gives you the upper trend, 2 points on the upper trend and 2 points on the lower trend, trend line. And that's really the only purpose. All these other lines in between really don't have a lot of significance. It's just the way the tool was. It's easier to draw with one tool at the points and not have to draw a trend line, come back and draw another trend line. It's just all one tool to draw them both at the same time. That's the only real significance to it. Hopefully that answers your question.
Yeah, we have no problem using tools that are going to simplify our life, right? And anything that makes our analysis a lot faster to do or more efficient, where we don't have to sit at the charts and try and figure out these trend lines. Moving the D automatically moves both trend lines at the same time, instead of you manually having going in there and changing those trend lines yourself. So that's why we like to use that tool. It saves everyone time, and you can get on with doing whatever you were doing before you did your setup.
And the other thing too is it gives us a nice little reference point. I can say, no, it's nice to say, okay, I'm using the D for a reference, I'm using the C for a reference, because those are basically all pivot points. And what you're trying to do is trying to connect pivot points along the way before it breaks out. Like this was a nice little breakout. Now we're going to see, now it's coming back into the wedge to retest the wedge and see if it's going to give us another opportunity to go along on this.
So Mariska's asking about the alternative to the RCS, since it's not readily available. It seems to be something that's really helpful, kind of a game changer. And do you know anything that a person could use to kind of...
I think probably the best thing we have going to help support the RCS is the dueling RSIs, where we have the 8-period and the 3-period RSIs overlaying with each other and waiting for them to be trending in the same direction, crossing over and then trending above and below this 40-60 range. Like right now, this thing, they're both coming out, but that's, again, it's on the 1 minute, so you have to take that in consideration. This is for, you like to see all three of these coming into the same area, pointing in the same direction outside the 40-60 range. And this was a nice, strong little move. As you can see, the 8 on the 50-minute broke out, came back in, retested the 40-60 range, and then broke out. And this is where that nice big move was, right over here, where we almost got our 7 pips. And now it's coming back in to retest it again. While this thing is retesting, this one is coming all the way down. If we can get the hook and getting both these coming up back out above the 60, that would be a good area to try and get in if we don't have. It's nice to have all three of these combined together. The RCS saying, yes, it's strong. They have the 3 Hall moving average saying, yes, we're all 3 green. And you have both these RSIs saying, yes, they're all above the 60. Then you come in and say, yes, it's within our zone. You take the trade. So you can actually go this one, confirm, and the 4th confirmation is it's still within the zone, or at least looking to the point where your stop is well within your 7 pip stops on a breakout. So if you don't have this RCS tool, you still, all these tools, this one, and everything else is all available just on the platform. Now just a question of, we have some of these combined and overlaying, so you can just use it as one indicator rather than putting in 2 separate. Right here, this is 1, 2, 3, 4. You actually have 5 indicators all built into this one indicator. And with TradingView, a lot of times, depending on what package you have with your program, you can only get 3 or 5 indicators per chart on your chart. And this one would basically, you have 5 indicators all built into one, and that only counts as one indicator. All 3 of these moving averages we have built into one indicator as opposed to 3 separate ones.
It's also a lot easier to keep it consistent. You don't have to mess around with moving one on top of the other, which I found to be a little irritating at times, to be just honest. Trying to move 2 indicators and trying to make them make sense together. It's once it's set up, but that's why we have that other tool. So we're trying to get that as available as possible for everyone.
Just so you do know that there is some news at 8:30 with the U.S. dollar today at 8:30, which is right about as we speak. So this thing could very well break as the news announcement happens, which is...
You also have new alerts, just so you're aware.
The Aussie US again. Oh, and we have a Euro US at 8:30. The fact it was a US announcement, I think we can take a look at that. Questions if you want to keep watching this one, we can. Let's keep watching this one. While we're watching that, I'll put the other one on, the Euro US on, and see what happens. Actually, I have that kind of up 8:30, and it was ascending on the Euro US at 8:30. So it's ascending, which is pretty much what I've already had drawn here. And here I'll show you what I've got with my Euro US right now. This is a 15-minute chart. Here's the 8:30 Euro US. I've already had this. Actually, I drew this out earlier this morning, projecting where a wedge may be, and they just got the wedge alert. It's ascending. A starts down here. B is up here at the next highest pivot. This is all on the other side of yesterday's close. The last pivot low, last pivot high before the close yesterday. I tagged it here in between the overnight session to the D, tucked my C in right, and this is, and so basically I have a wedge alert based on the wedge that I've already drawn, which is really kind of reassuring that I picked that I drew that correctly, or I drew it the same way whether I got the alert or not. And so we're looking for this to break to the upside. And see, while we're doing that, I'll look at this US CAD, see if there's anything here I need to be paying attention to on another monitor.
So Alan had a question. The indicator is part of a template subscription with Hawkeye and AIRIS today, or is it forthcoming? It will be potentially forthcoming. There'll be a way to get all that figured out.
My understanding is there may be a meeting on that today.
Okay, well, now we're talking.
We're hoping to see. Okay, I'm going to tuck this all in real tight to make sure everything's where I want it to be. I'm going to put this. D is going to be a reference to a breakout, so I'm going to mark this. I take this all the way up to where the D is. And we should have it. The AC area is pretty flat, but we'll mark the A down here. If I can get that close. Right about in there. And right now we're looking to see, waiting for this thing to break out to the up or downside. And overall, we're looking at the overall strength of this. Oops, wrong one. Let's do this again. We're looking at the overall strength. We have the dollar, euro they're pretty much on top of each other. Nothing real special about the spread on these right now. So I would be waiting a little bit more for confirmation on a breakout. But in the meantime, we'll go and we'll draw our upper bands off of our 1-minute chart. Get this out of the way. And so we have our trend line, come over here, get on top of our upper band. Actually, while we're doing this, let me put a stick in here. I'm just going to take it from here, this bottom low to actually that's a pretty wide area there. I'll take it down.
You said Euro USD was at 830, right?
Yes. Draw a stick. This time we'll probably start using a little bit more. I use this a little bit before. We'll see if there's anything to it. I think there is. All right, we're going to spread this out a bit so you can see a little bit better. And we're going to go with the trend line. Move it up 2 pips. So that's at 61.6, 63.6 we're looking for. 63.6. That is 62, 64.5, 64.5. We'll go right about there. Make this our entry to buy. And then we're going to do the same thing at the bottom for entry zone to sell. And that's going to be at 30.09, 30.9. Right about there, entry to sell. Everything's trying to keep everything as mechanical as possible. And now we wait. We see, make sure we have enough range, which I'm pretty sure we do, based on what I'm seeing here. Our range is, we have 29 pips. That's a nice range to know to look for. But basically, right now we're in a box. Basically, and we discussed this a little bit last night, where you're really looking to see, the market goes either trends up, it trends down, or it trends sideways. Right now, it's trending inside of a box, which is going sideways. So if you look at this pivot height, and you look at this pivot low down here, that's our box. Let's take this background off. And so really, it's right now, this box right now is pretty much 20 pips. So what we're trying to do is we're trying to catch only 7 pips once it breaks out of the box. But while it's inside this 20 pip area, right now you can see you're pretty much right in the middle of everything. So you're just looking to see to either try and, once it breaks out, you want it to stay within the top third of the of where the box is. And you can see we have some more fib lines right here. And so like once it breaks out of the top, this would be the next 7 pip area, that'd be 14 pips to the upside. And then that's 21 pips to the upside. But right now you're right in the middle of everything. So I'd like to see this thing break out of the bottom of the wedge, which is way down here. And but until then, you just have to bide your time and wait. You have a moving average right here. This is a 30 period 62 moving average. These are all exponential moving averages that we're talking about. And you'll probably get it came up here, test this, bounced. Try testing again, didn't even get up quite as high, bounced again, went a little bit lower. And so right now, once it breaks this area, if it can break that, and if it can break the wedge, then we're clear to the upside. And there's not a lot of anything going on until we get all the way up to here. And if we look at our US CAD trade, so this is our setup for the Euro US. Come back over here to our US CAD. And let me go and how's our Aussie doing? Aussie's still Still meandering around. So I'm going to put this over here. And put this one next to it so I know where my next two are. And so we have our CAD trade. It's still inside the wedge. It still hasn't gone. It hasn't gone anywhere. It hasn't broken out of the bottom.
We got a question again.
Hasn't broken out of the
Yeah,
top yet.
It's a
this is
big
a good
question.
one. This is a good one.
Says, how many active trades are advisable to enter? If, let's say, Iris gives 5 signals and all 5 reach target within the same relative period of time, do you enter, take profit and stop loss before going on to another pair when trading more than one at a time? If not, how do you manage the actively traded pairs? Be careful of entering trades that are opposite of each other for one thing.
Mm-hmm.
Because that can happen. So, Al, it's all yours. How to manage more than one
Hey,
trade.
can I take a snap at it? Let me take a snap at it.
Let Matt take a shot at that one.
All right. So my quick and easy answer is as many as you can handle. That might be 1. That might be 2. But I'll be honest with you, there was a day where I am only taking 1 trade a day. I'm looking for the best trade. I am not swinging at absolutely everything that comes my way. I find that as you swing for everything that comes your way, especially with live money, you're not being as wise as you could be, because not all the trades are going to be great. Maybe Al can throw something else on there.
Well, and the other thing is, a lot of times when you get multiple alerts at one time, it's usually showing that a certain pair has a certain currency has dominance over the other 2 or 3 pairs that you may be looking at. All the pairs that we get the alerts all are U.S. based, U.S. dollar based. The only other except, well, even the gold is everything has a U.S. currency pair to all the alerts that we've been getting. I don't know if that's going to change, but if you're getting all alerts with a strong U.S. dollar or a weak U.S. dollar, just keep in mind that if things don't go well, you're going to have 3 positions that are not going to work out, or you can have 3 positions that will work out, assuming that you're in the proper direction for the strength of the dollar or the weakness of the dollar. So it could work. It can work for you. It could work against you. But I think it's hard to manage unless you have several monitors. It's hard to manage and watch each one tick by tick if you're trying to go through 2 or 3 pairs with one monitor. So a lot of times I'll have I usually won't do more than 2 at a time, but I have 2 separate monitors I put side by side. I'm looking at each one individually. And I usually want, if I do take them, I want the pairs to be, the direction being the same direction with the strength of whatever pair I'm looking at. I don't know if that answers your question.
Yeah, I would agree completely. And myself, I'm not taking more than 2 trades at one time. My head just can't handle it, let alone try to analyze multiple pairs, but to handle multiple pairs in live trades, it's not really worth it. You're kind of pushing the envelope towards more greed, right? Because if you have 2% into your 7-pip stop loss, if you're making 2% a day, you compound that over a year, you're a king. So you don't need to take all these crazy trades. Just take whatever best setup, use the options available to you and see what one looks better for you.
Yeah, and usually one stands out that it's a little bit better pair, or you might have a history that you might have more success with one pair versus another, and then you just say, oftentimes the setups aren't going to be quite the same, so you just take the best one first, and if you win with that one, the other one's still setting up to break up, you can take it. There's nothing wrong with doing that, but a lot of times, and a lot of times they'll give you some leeway between the times that they break out with each other. Oftentimes, if you have a news announcement, like in this case, we had a news announcement at 8:30, and we started getting some. We had a alert on the Aussie US, which we already had drawn out, but it hasn't really done much yet that I can see. So this was right at the 8:30 area, right about where this blue stick is, and it broke out a little bit, but it didn't do anything. So, but again, it's still sitting inside the wedge. Even with that announcement, it really didn't do a whole lot. nor did the Euro US. It's still sort of going back and forth, and as is the CAD. Now the CAD did have a little bit of breakout right before the announcement, came back down during the announcement. Here was the announcement. It was already predicting what the announcement was, came back a little bit lower, and now that as I see this, now this is on a 1 minute chart, so keep this in mind that it doesn't hold a lot of weight, but you have a little bit of divergence here. And what I mean by that, because this was mentioned just a couple of days ago, you have a low here and you have a lower low here. So I'm going to put a little trend line right here. This is my divergence line. Now again, it makes more sense on a higher time frame than on a 1 minute, but I'm just going to give you an example what divergence is. You have a low, a lower low. Come down here to your RSI, and you see both of these RSIs, you have a low and a higher low. That's your divergence. So you have, so basically what this is saying is that even though the price came down lower, the strength did not. And so that a lot of times that's where you get these little whipsaws where the bigger money will come in and they'll drive the price down below, trying to get everybody sucked in to go short, and then but the strength isn't there, and then it breaks to the upside. And I'll draw that, and so then you have this area like right in here, and you can see where it's sort of trending up.
Yeah, Euro USD's got hitting the top of the trend line, right?
Yeah, let me go and bring that over to here. Okay, again, Ron, we're looking at this thing to see if it's going to break. I'm just going to move this out of the way for right now. Spread this out so we can see it a little bit better. Check out our different time frames and see how the strength is. Euro's strong by 4, Euro's strong by 6, and Euro's strong. So if this thing breaks out to the upside with all of these strong, so we have strength to the Euro, we have 3 green on the whole. These are up above the 60 on almost all 3. This one's just breaking out, and as this thing breaks out, we could be looking at going long on the Euro US. We want to see a strong candle up into the zone, followed by a red candle, and then get in.
Yeah, so there's another question. So with 1 trade per day and being selective, how does risk management and position size correlate? Well, you're only ever, look, listen, I only ever, and I'm only speaking for myself, I only ever risk 2% per trade as a general guideline. So if I'm in 2 trades, then that's 4%. But I'm not risking 4% in 1 trade. If you know what I mean. And like we said, most of our trades last about 30, 25, 22 minutes, 30 minutes. Worst case scenario, maybe an hour or 2. If you get in at like noon or 2 o'clock, you might be in the trade until like 7 or something like that. But generally, after we do our setup and we get in, it doesn't take very long for it to go 7 pips, because that's the we're looking for the impulsive breakout, right? We're not sitting there looking for eastbound traffic like we had yesterday.
Yeah, actually, I'm trying to get my other chart set up here real quick before something else. Actually, I want to do a duplicate here on this one. A duplicate chart, and that way I can take it over to my other monitor and keep an eye on it. That's the Euro US. You can see where it came right on up to the top of the wedge, didn't tagged it, couldn't close above it. And so now it's going to come down to the other, it's going to be playing around. But you see it's still, right now it's in the upper part of our box, so to speak. It's still going sideways, but it hasn't broken through the bottom, hasn't broken through the top. Once it breaks through the bottom of the box, then we have a little good chance that maybe it's going to come down and keep on going. And see, the alert was at 8:30. I have to redraw my other platform here. How's our CAD doing? CAD's breaking to the upside. That's looking a little bit better. It's like it's trying to make its way to the up. This might be the second opportunity for the US CAD. And look at all of our time frames. I'll take that off here. So we're still looking at a possibility of a target up to around the top of this stick or up in this area for the CAD. Now, I don't know that I'll let it go that long. But right now we have all of our moving averages. We have all of our moving averages are in the right order on the 15-minute. They're all in the right order. We have the green, yellow, purple on the 5-minute, and we have the green, yellow, white on the 1-minute. So all the moving averages are in the right direction. Our RSIs are coming out. They're above. This one's coming out of the 60-40. They're coming out together. That's good. The US is still showing strength to the Canadian. It's lost a little bit of a ground. And we still have it showing on all three. And you still have 3 green. Now this is throwing a little bit of a pullback right now, but this one's still showing it's coming out of the 60 area. It's having a hard time breaking out and holding it. Still no new alerts. And it's coming up on 9 o'clock, so we have another couple of minutes, 7 minutes before the next 15-minute candle. And you can see, like on the 15-minute candle, let me just take all this off here. Try and clean this up a little bit so you can see a little bit better on the 15. A lot of time I like to check the price action on the 15-minute. I'll even take the wedge off here, just so you can see the price action. And you can see that right now, here's a 15-minute red candle, but right now you have 2 candles that are pretty much engulfing this one. So it hasn't really broken out of this range. We've had a nice move up, a little bit of a basing, a blue candle, and then we'll see if we can get this thing to break. There's a good chance it's going to break through and head on up to the upside. And you can see that when we drew we had the wedge, this yellow line right here, you can see where we had this nice candle. This candle, it broke, which was the top of the wedge here, and it broke and closed above, came back into the wedge. Now it's breaking at this area again. So right now, this is a little bit of a basing area over here on the 15-minute chart. So this is the area of interest right in here. This is a 50-minute. If it closes above the top of the box, I think we'll be off to the races. And we should know in about another 6 minutes. So it had like a little bit of a rally. It's basing. It's a fairly deep base, but nonetheless, it's a base. But there's the beginning of the rally. Came up, tested, came up, basing again. And now we'll see if it can come up to our target area up in this area. And this is a strong line right here. This is also this area, this red area right in here. This is the area where we had to go all the way back to a 3-hour chart to be able to find this area. And so there's a lot of sellers probably up in this part. So it may have a little trouble getting through. It's got all these from this red line to this. These are all wick. That was just one 3-hour candle wick in that area. And should know a little something about another 3 minutes. I said all of our moving averages are in the right direction. And we'll see if this thing will break to the upside. That's a little bit of above our zone, but it came back and but did test the wedge right here. We're still waiting for it to kind of pull back a little bit. It's not unusual when the candle closes, like a 5-minute candle or a 15-minute candle, especially when it closes, it'll close to the downside and then it comes back up. So it would not surprise me to see this blue candle close pretty much neutral inside this zone.
Yeah, so we got a question here. We got, am I correct when I understand that wedges, the direction, ascending or descending, is not as important as the direction that strength is, as direction strength outside of the actual wedge? I would say yes, because we're just looking for where the breakout is. The direction of the either ascending or descending, like we've said a few times over the course of the last little while, is that depending on where the wedge is located in the run, if it's at the bottom of a run or the top of the run, then an ascending could break out of the top or it could actually break out of the bottom. There is odds that it breaks in one direction a little bit more frequently than others, but I don't want to hang my hat on those odds. If we can go down to the lower time frames and get a better break of the wedge, then we're going to be in a much better position than a lot of the other traders who decide that, okay, well, it's ascending, then let's look for it to break out of the top, or descending, break out of the bottom. Hope that answers your question.
And we can see that now. This is one of the problems about watching too many charts at too many different pairs at once. You can see as we were talking, we were watching this. The euro broke out of the wedge, and now it's taken to the upside. And we didn't get into this trade because I didn't see it.
Yeah. Yeah, I had it broke out, but
Should have mentioned it. Should have called us to call our attention to it. Yeah, that's the breakout. This might be the trade right here. 65 to coming right on up to the. That was more of the trade as we were watching this one. Darn it, missed it.
Mr. Clemens got it.
If anybody's watching things and we're watching two different charts, feel free to please just put a chat and say, hey, take a look. This looks like it's breaking out of the upper part of the wedge or bottom. Help us watch these things.
Yeah, sometimes we get carried away in discussion. Sorry about that, guys.
And it would not surprise me to see this thing break out at the bottom. As the dollar is getting weaker on the Euro US, it's also getting weaker on the US CAD. And we'll see if we can get a breakout on this one here. It's starting to break out of our box, and here's our wedge at the bottom. We'll see if we can catch this thing.
Euro USD went the full length of the stick from the break. It's what, 28 pips.
And it's still going.
Yeah, but I'd be happy at 28 pips. But I'm not in that one. I was distracted.
I'll see if we can come down here to our target on this US CAD. It looks like it's breaking out of the downside. It's down into. It's a nice strong move down. Is it going to give us a chance to get in? Here was a little bit of a basing right as it broke out of the box. This thing closes inside. If it closes with very little wick, I would take this thing short. So I got this reversed. 7, 15. I'll give this one a little bit of extra room to get down to the near this. Get to the bottom of that stick.
Oh, that's a really nice candle. Yeah, if you got your trade today, walk away. You know? At 2%. Oh, go ahead. Go ahead.
Here's our target right here. We had we got in pretty much right as this candle closed. So that would be right now. This is at 12, looking at 5 right down here. So this would be our target right by a blue line. Here's our target. Let's see if we can get our. That's the first 7 pips, and I got 15 pips down here. If it keep on going. There's a question about how to get TradingView at a discount. Basically, you sign up for the free session, the free version, and then after about 27 days, when they want you to buy, they'll give you offer types of offer a 50% discount on that, and then you can every uh, Black Friday after Thanksgiving they offer 50-60% discounts on the when you resubscribe or you update your subscription. Most of the time you can get it for about 50% of the advertised cost.
Yeah, I mean, most of us don't pay full price for it. It's like $200, a little over $200 a year. So it works out pretty good.
And one thing we have to be careful right here on this, we have a moving average right here, our 62. We see it came right to it and bounced. So if there's 7 pips, I'm going to take my profit on that. And it's going to come back up and probably retest the wedge. Might give us another option. Might give us another ability to get in. See right now on the US CAD, the spread on this is almost 2 pips on the platform that I was using. As basically has a 1 pip spread. So that extra pip was able to get me get my target a little bit earlier. It's coming back in, retesting the bottom of the wedge, retesting our buy zone, our sell zone. But the fact that this 62 held would give me some concern just to be sure that, I mean, it could give you another chance to the downside here. Everything's still pointing down on the 15. We have still like to see 3 green. Excuse me, have 3 red. You can see where it came down past the green, checked it, came back up. Now it's rechecking this green line again. So there's a little bit of a battle going on right at this mark. I don't have my 3-point spread here anymore, nor here, nor here. Right now, the CAD and the US are fighting for last place. So I say if you can get your 7 pips. See if we can get it again here. Never really did reach it yet. And a lot of that was because of the spread that I had on this platform. And we're 5 minutes before 9:15, which means we may get another alert possibly in another 5 minutes. We could stay here and keep watching this, or if you want to take a break, we can do that. That's up to you. I'm going to stay here and keep watching this one. Nothing worse than going to get a cup of coffee and have it cost you $100 because you weren't watching the trade.
Yeah, that's true.
Now we have the close below this moving average. I'm going to see if it's going to. Ultimately, I'm still looking at the stick and also looking at the target. But if you can get your 7 pips, I say go for your 7 pips. The U.S. market's going to open up in about another 15 minutes, about another 16 minutes. Excuse me, 19 minutes, no, 20 minutes. The U.S. market's going to open up, and you'll probably see some volatility with the Euro US and the US CAD both. So Andrew, you're just saying to just use the paper trading part rather than using the account with TradingView. They do have that paper trading ability.
Yeah, I use paper trading when I want to do my demo stuff. It's just easier.
So it does give you a little bit better spreads.
Yeah, but it might.
So what feed are you using for the paper trades? What broker are you using for the feeds, like FXCM or Awanda, or is there a better one that gives you better spreads? Would be the question. Normally they're a lot closer than, usually they're within like a half a pip apart. For some reason today they seem to be a little bit stronger, a little bit wider. This 5-minute candle is going to close in about another 14 seconds. And right now, it looks like it's going to be pretty much almost a doji if it's another 2 seconds. And right now, from the bottom of this blue candle to the yellow line is only 4 pips. And we're 15 minutes from the US market open. And it looks like it's starting to make an earlier move. It's hard to say which way it's going to go right now. Right now, came back into the wedge. This 62 pretty much held. This one's still a target zone.
Just be a nice pullback. We'll see.
This is our box that we had. Still holding that. It broke out of our, so right now it's sort of trending. It started a little bit of a trend. And with this nice move down here out of the wedge and coming back into it, we'll see what kind of a retracement we get with that. If we get, say, so still looking at the, here's where the break was for our stick. We'll see how that works. We'll see how that plays out. But we have this nice move down. And what I'm going to do is I'm going to draw a retracement from up here to here. And we'll see how high this retraces. If it retraces, and right now it's beyond the 38, so this could be a little bit stronger move. That would indicate the use of this thing. But right now it's coming back into the box. Coming back in to retest the upper part of the trend. You can see the wedge is getting tighter and tighter. I'll take our box away since it broke that. Now we're just looking to see if it's going to come move to the upside. So there's a battle going on between the US CAD and the US dollar and the Canadian dollar. There's a battle for last place right now. Which doesn't make this to be a real popular pair in my mind with that. It's not really there's no real winner right now. They're still kind of battling it out. Now we did have the break of this 15-minute candle. It did break and did close below this big blue candle. I want to see if it doesn't close above This is our zone that we're dealing with right now. This is the next area of, right? I don't want to see it close above this blue candle. I don't want to see this 15-minute candle close above this red, this yellow line. If you're sure, that would be a danger zone for a short. And right now, there's really no strength and no trade. Everything's as far as right here in the middle on everything. So no confirmation. I think it's still favoring the downside, but wait and see what happens if it breaks through our sell zone again. All moving averages are still red on all three. We're still waiting for the third one right here. The cat is stronger on the 5-minute, but not on the 1 or the 15. And we'll see what happens in another 8 minutes. The cat is Canadian dollar is still overall weak to pretty much everything. The dollar is gaining a little bit of strength, but still fairly weak as well. Any other questions or comments while we're waiting around?
Looks like we got another quiet morning, my friend.
Yeah, well, everybody's watching the trades. When the trades are active, everybody's real quiet and watching, which is a good thing. That means you're concentrating. I don't like the fact that the 15 minutes are pointing up on this one.
Yeah, the hulls still indicate downward pressure, but see what's going on.
This one's starting to come out. We still have the hull looking good. The dollar is still showing weakness on this. We can see how this 5-minute candle closes. Looking at this little blue candle right here, came up. See where a fib line is. Here's a green fib line. It broke, coming back. If we can get another red candle, we can take another shot at this thing. I'm going to use this blue candle for a reference. Since this one got broken, this is the next one we're looking for a bounce of. There's still a possibility of this being the target on the downside. It still has a breakthrough, this 62 on the 5. These are all 3 in the right order on the 1 minute. Getting a little bit of basing right here. That's a good sign for a short. Sell stop at 34.09. Move this down just a little bit. All red bars. Cat is strong. Cat is strong. Cat is still strong, not by a lot. 3 minute, 3 periods come down. It's out. It's hooking back up. It did get me in the trade. And 2 minutes before the market opens. There's a pass and check, passed. Now let's see if we can get a close, another close below.
It's a lot of wicks, eh?
It's a lot of wicks. But spacing right in here. So spacing right below where the wedge is.
Alan's got a question about why we're kind of following USD CAD more than the other ones.
Because that's the one that's in play. The Euro US seems to be pretty much out of the chute, and so there's no point trying to chase it.
Yeah, that one happened really fast. So the last thing you want to do is get into a trade at a bad entry because we're using such tight stop losses that a bad entry could be detrimental to your success.
And right now, the US CAD still seems to be the one that's in play. And we're 2 minutes into the market open.
Excuse me. Also, in regards to Alan's question, when US CAD began to do its thing, it was not a weak pair at that point either. Once the trade was taken, US was up around 6 and CAD was 0. So it's only become that in the last hour.
I do like the fact that we did get a close below this moving average, came back and retested, and now let's make another run below. This moving average is at 34.11. Here's our stick reference. Here's our target zone right down here. This spread did stop me out on the one that I took here, but I'm still in it live on the other on my own platform. And right now, if it goes back up into the wedge, I'll be out of this trade. See, I got in at 34.11 is where my fill was. And so 11. And 04B, I believe, is my target here.
Because Euro US is such a big pair, we mentioned it yesterday that it is coming into a daily supply area. It's still sitting there at the 1783 region. However, today's candle could be the push to go up a little bit higher. So that matters, but that's the most traded pair. So keeping an eye on that's never a bad thing. Good, Kirk. Just saw that. We have what, about 15 or 10 minutes left in our session?
See, we're due at 9:45.
I think that's correct.
What time are we done today?
Catalina's does her thing today as well.
Okay.
If by chance you guys do watch the Euro US, and I know a lot of you guys are, we are inside daily supply, weekly supply, and monthly supply. If it happens to break, we've got a long ways to go up before we ever have any real resistance. Unless governments jump in and decide they want to move the price. I could easily see it coming up another 500 pips.
Euro US?
Euro
Gross.
US.
Well, one thing about I've learned a long time ago is you don't try and pick the top and you don't try and pick the bottom. You just let the charts tell you where to go and just take a little bit on the way up and on the way down.
Exactly. You try to get the top, probably not going to make it.
And just so you guys know, I'm a contrarian for sure. The Euro US is now, it started today at 2.2. Majority of the people are short. I don't know how they are, but they're losing money right now. We started today at 2.2. We're now at 2.7 on the Euro US to be long. And so majority of people are still short this thing, thinking it can't go higher. And remember, majority of the crowd is normally wrong. Therefore, go against them. The US CAD, majority of people are long that one. So being short is probably the play on this.
Ooh, that went up real fast.
There's my target right there.
Which one? Let me check over here again, what y'all are looking at there.
I'm still looking at this thing going short still.
Yeah.
We'll see how this candle closes. Another second. There you go, new candle. Slow wick up. There's a little wick over wick. Still heading to the downside.
Euro US finally made its higher high finally.
And that looks like a nice place to get out. And that's the end of that US CAD trade. If you can still be in it, you can always still keep tracking it down on the as the pullbacks, as long as it stays below this yellow moving average on the 5 minute particularly. It still can be a short, but you'll probably have to give up some pips in order to get back up there when it retests that. This is a nice little drop, little base. And if you're looking at a zone for this,
33.93.
As I was mentioning earlier with these pullbacks, you start with a pivot high, pivot low, have this pullback is right there at the 30%. So right now this could be a target right down this area. If you want to give it that much, you can do that. And then I would, again, probably split the difference about to there. You see it came right down to the top of that area. It could still come down and penetrate. It's got this green line. It's probably going to be looking at this green line here. And then maybe possibly get another bounce to hit back up again. Or it could keep going down to who knows where. But right now, that was nice. You got about, I was able to get about 12 pips out of that little trade there.
That goes back to what we were talking about earlier. If you look at this on a 1 hour chart, we're in an uptrend. And this is just playing the pullback because you're not really looking for trend, you're looking for momentum.
So go and put this to 15 minutes to get on a 1 hour chart just so see what you're talking about. And here's a 1 hour chart. So here's where on a 1 hour chart, here's where this, you got a little doji right here. So it's going to get a little bit of a bounce. And on the 1 hour chart, you're looking at an uptrend where all the moving averages are heading in the upper direction. This is a pullback. On a 1 hour chart, this is basically a pullback right here. Here's the beginning of the move down below. Let me take all these off. And again, you can look and see what, I don't know how deep this pullback is going to be. If you start from here, take it on up, bring it back down to about 30%, which is right about where the yellow line is. This could be the upper target in this area of right in here. This is all higher time frame stuff, but this nonetheless you have to respect the higher time frames.
Again, just a reminder, this is the last of the month. You have some real strange stuff, a lot of news going on. It's pretty unpredictable as far as overall what the position of the big guys are, institutions and governments and things like that. From starting next week, we may see some different picture.
You can see right here, we have this little, on this 1 hour chart, here's where we had a nice move up, came back down, the red candle came down, that was as low as it could go, and then this blue candle came right up, and now it's retesting this area right in here. So I would be willing, that's one reason, another reason why I want to take my profits as it's coming down close to this 62 moving average. And on that note, it's about 9:45. I think we should probably wrap it up.
Sounds like a plan.
All right, everybody, thanks for coming in. Hope everybody was able to make a little bit of money today. Sorry we missed that Euro-US trade. That's because some of the reason why it's hard to trade multiple trades at one time, because you're focused on one and you don't see what happens on the other one. And I'm sitting here with two monitors and I still missed it. So
I've got three and I still missed it.
Yeah, so pick one and take the best one. Euro-US is usually a really good one, but we're already in this trade, so we always kind of monitor the store that you bought. So on that note, everybody have a good rest of the day, and we'll see you tomorrow.